Hello guys.
Hi everyone, how you guys doing?
Hi everyone.
How you guys
How
doing?
you doing?
Long
Alhamdulillah.
time no see, guys.
Doing good.
So
Are you guys at your home?
yeah.
Yeah.
So guys, so since we have to do our audit one assignment, right? So we have
Yes.
agreed to choose the topic audit planning. So I assume that each and every one of us has have prepared with the things that we are going to talk about, right? So
Yes.
shall I begin?
Yes, please.
Yes.
Yes.
Please proceed.
So
Please start first.
audit planning. Bismillah. So first of all, um, when doing audit planning, there are a few steps that we have to take into action when accepting an audit. So as an auditor, firstly we will approach by new client since we are taking the job, right? And then we have to obtain ethical clearance from previous auditor to check on our client whether they are fraudulent, errors, and so on.
I see.
Then we have to evaluate the integrity of the management. We have to know who our client is, and then evaluate the independence and assess technical competence to perform audit. And after that, only we can decide whether to accept or decline the job by our client. And if we accept the job, we can prepare the engagement letter and then evaluate our existing client now on an ongoing basis, in which we can do it like weekly or monthly and so on. So there are the appointment process before we say yes to accept the job. So an auditor must have great caution if asked to be the auditor of an organization. Why so? So because there are a few questions that come into mind when the company is looking for an auditor.
Auditor.
So first of all, they will question things like are the auditors professionally qualified to act, and then is it legal and ethical for them to do so. Like an example, the company shouldn't accept an appointment if the fees exceed the 15% limit for public interest companies unless there are adequate safeguards. And then, do they have adequate resources in terms of staff, time, and expertise? Like if the potential audit clients act in a specialist area of business and the auditors have no prior or before experience of that, it will be very unwise for them to accept the appointment. And after that, they will investigate the client, its management, and directors. So, because many firms of auditors have access to databases which allow them to search on the director of the company and so on. So they have to know whether the directors have been banned from being directors of companies because of their past behavior or something. They may discover that it is too risky to become the auditor of a company if they have no integrity, honesty, and so on. And also they have to communicate with present auditors. So why? Because there is a professional requirement to do this, and it is important to know how the old auditors are doing. Like, are they retiring or are they quitting their job or so on? And when you're communicating with the existing auditors, so if the auditor is approached by a new client, then the business and the first audit will be no previous auditors to communicate with. So, and the auditors must make their own decision. So I think that's pretty much all from me. So why don't you continue? Anyone? Maybe Saiful?
Okay. For this part. Okay. For this part, preconditions for an audit. So as you can see here, according to ISA 210, agreeing the terms of audit engagements, an audit can only be accepted or continue if so the first one is the preconditions for an audit are present when the financial reporting framework for the preparation of the financial statements is acceptable. And next one, management agrees that it acknowledges and understands its responsibilities for the financial statements, including internal control. And the other one is to provide the auditor with information necessary for the audit process. And then the next one, an audit can only be accepted if there is a common understanding of the terms of the audit engagement. And then we move to the next slides. And these are the other precondition for an audit. And as you can see here, if there are these matters must be formally documented in an engagement letter. And then the can you repeat the to go to the previous slide? So an audit can only be accepted if the matter, go back to the next slide. Only if these matters must be formally documented in an engagement letter. And then the last one is an audit engagement must be declined or discontinued if the management or those who are in charge with governance impose a limitation on the scope of audit. For example, like the auditor will not be able to form an opinion. So an audit engagement should be declined if that kind of thing occurs. And the last one is, and the next one, if uh, it's okay, we move to the next part of this this audit planning topic, which is the engagement letter. So I would like to continue. For the engagement letter, upon the appointments, all of the auditors should send an engagement letter to their new client. So meaning that the auditors would like to engage themselves with his or her client by sending out the engagement letter. This is what it meant here. And then the next one is engagement letters actually are often regarded as rather dull documents which is sent once and then forgotten, because the auditors only send the engagement letter to the client, and then if the client can accept the engagement letter, then the auditor will do the part of their jobs. And however, there are some crucial importance because they set out the contractual relationship between the auditor and the client. So meaning that if the engagement letter is not sent out, so it will be very difficult for an auditor subsequently to complain that the client hasn't done what was expected by the client. Or it might be difficult for the auditor also to defend the audit firm against a claim that the auditor has not done what was expected.
Yes.
Next. Then this might be the last part for the engagement letter. So the engagement letter also can define the auditor's responsibilities. So meaning that in the engagement letter, the auditors can put all of his or her responsibilities so that the client will know from the engagement letters. And the second one is to provide written evidence of the auditor's acceptance of the appointment. And we should move to the next one, which is the engagement letter also should be sent to the board of directors or audit committee prior to the first audit. And the other one, the engagement letter also could identify any reports that to be produced in addition to the auditor's report. For example, for banking or insurance clients who may come under additional scrutiny. Do you have any idea about this one, guys?
No, not at all.
No, not at all.
So meaning that if the auditor can put all the details in the engagement letter, so all of the board director may know any other extra information for the auditor in order for them to do the client's job. And the last one is the engagement letter also should be updated for all changes. For example, if the auditor begins to undertake tax work for the client. Okay,
Okay.
next. Ni siapa?
Habis.
Ni siapa?
Next. Pas terus je kat Hamzat.
Okay, Mazat.
Is it me, Saiful?
Yeah.
Alright.
Yes, your
Okay.
turn.
I would like you to proceed our discussion.
Alright. Thank you,
Mr. Manzai.
Saiful.
Please proceed, Manzai.
Alright, thank
Our
you,
discussion.
Saiful and my team. Okay, continue with the stages of an audit. Of course, audit is important. Auditing is important in audit, also in accounting. So we must learn the stages in audit in order to make sure that audit is properly ready and can be used for a lot of site and company. Okay, for the first one is appointment. Because the first one is appointment, and then we go to plan the audit, understand entity, assess risk of material misstatement, and the last one is respond to risk. Okay, next slide, please. All right, in audit planning, all audits will start by planning and understanding. That is why I said before, audit is important because we must totally plan the audit process in order to understand all of the process and measuring process in the auditing. Next one is after the stages, the auditor can assess the risk of material misstatement and respond to that risk. If you are dealing with a relatively new company with inexperienced staff and which has high value portable inventory and many cash transactions, you will probably see that the risk of material misstatement is relatively high. If the auditors conclude that is the case, then they have to plan for their audit work to reduce the risk of material misstatements. Next slide, please. All right, in audit plan changes also, there is an updated as necessary. For an example, as a result of unexpected events, the auditor may need to modify the plan nature, timing, and extent of further audit procedure based on the revised consideration of accessories. Information also comes that is different to the plan info. For example, an event creating doubt over going concern or amend initial risk assessment, performance materiality for all or part of the audit after performing planning procedure. Next slide. All right. For audit approach, there is two types of audit approach, which is left-hand branch and right-hand branch. For the left-hand branch, the auditor has reason to expect that there are effective internal controls operating, and also if there are effective internal controls, then the auditor may rely on, for example, employees of the company checking on the one's another's works, reliance on reconciliations and comparisons being performed, and reliance on authorizations. If there is good internal control, the chances of errors getting through into the financial statements are significantly reduced. And also, therefore, rather than examine a high volume of transactions and balance, auditors tend to test the effectiveness of control. And the last one is, if satisfactory, if the company is satisfied with all the process, the examination of the details of transactions and balance themselves can be reduced. Next slide. All right, continue with the right-hand branch with this, which is the second type. If the auditors do not expect to be effective internal controls, then the only way the auditors will be able to get assurance that the financial statements are free from material misstatements will be to carry out procedure designed to detect material misstatements, which is substantive procedure. This will mean examining a higher volume of transactions and balance. Next slide. All right. We have end to my part and continue with the next part, Fahmi.
So now,
Fahmi, Kayu, continue.
so now I will be explaining about the. At the end of this discussion, we will be knowing that how is the process of audit planning, and what are the importance of audit planning. So basically, audit planning is very important, very significant for us, and to the auditors also, state in the auditor's report that they plan and perform their audit. So ISA 300, planning and audit of financial statements, is written in the context of recurring audits. So next slide. Okay, now we will move on to the reasons why planning in audit is very important and very significant for us. Because if we don't plan it, we won't carry out the audit effectively. So therefore, we would not know something as obvious as when the year end is, or how many branches or factories a company has, or how many staff members you may need to conduct the audit, or whether the company has a lot of valuable inventory. So we, as the auditor, we have to think both of a general strategy in a detailed approach. For example, in some very large companies, auditors do not visit all the branches every year. They may visit only a quarter of the branches 1 year, another quarter the next year, and so on. So we have to decide whether or not to attend a physical inventory count. They may have to decide whether or not opinions from other experts are required. For example, on the advocacy of the company's pension scheme. So next, what are the objectives of adequate planning? The objectives of adequate planning is basically to give appropriate attention to important areas. Is there a high inventory? Is there a high volume of cash transactions? Are debtors particularly significant? Yes. So the objectives are, next one, the objective of adequate planning is to identify potential problems. For example, if the company has recently changed its computerized accounting system, there may well have been problems at the switchover time, and staff may still be inexperienced. To carry out the work expeditiously is also one of the objectives of audit planning. That really means reasonably quickly and efficiently. So last but not least, the objectives of adequate planning is to ensure that the right numbers of staff are in the audit team with the right skills. They have to be timetabled systematically so that the work for this client and other clients can be accommodated. Next slide. So, before that, the previous slide, Nasrullah. Yes, this one. The last two objectives of adequate planning is to coordinate, if necessary, with other parties, for example, the internal audit department of the company. So to conclude or to end the objectives of adequate planning, one of the objectives are to facilitate the direction and supervision of the audit team and the review of their work. The work performed in an audit is subjected to many reviews. The audit senior will review working papers prepared by audit trainees. Then the audit manager will review them. And finally, the partner in charge will review them. All of this has to be timetabled, and time must also be left to clear the review points. For example, if additional work is required. That's all from me. Pass to the last person, which is Ahmad.
Hello, everyone. Can you guys hear me?
Hello. Yes.
Hello,
Very clear.
Nice explanation from Ahmad Fahmi.
Before I begin, I would like to ask a question to all of you. Are you guys still okay to continue?
Yeah.
To know more about Alif?
Yes.
Why don't you continue?
Okay.
Continue.
Don't worry, I will make it short as
Your height.
Okay, so right now I'll be continuing about the understanding the identity. In this part, I will tell you about how the auditors should understand about an entity. So the first one, the auditors need to understand about the nature of the entity. The auditors have to understand the nature of the entity. For example, we simply have to understand what it does. It is in the financial sector or the retail sector or the manufacturing sector. And this may seem trivial and it may help you to think of a new audit client. And you can often tell very little from the name of the client. And also you have to go and find out about the entity itself. And the next point about the understanding about the entity is we need to understand about a particular regulations. For example, about banks, insurance companies, and many other operations in the financial sector are subject to regulation. And sometimes the auditor has to ensure that these regulations have been adhered to. And the last one is about accounting policies. We need to understand what the entities' accounting policies are, and about different entities have different ways of valuing inventories perhaps. And if you are a building company, you will have specific accounting policies with regard to taking profits from long-term contracts. Next slide, please. And also, what else do you need to understand about an entity? Also, it's about nature of business. You need to understand about the nature of the business risk. And you know, most of the business risk will eventually have financial consequences, and therefore it will have an effect on the financial statements. And also you need to understand about the internal controls. You need to understand that the auditor has to gain an understanding of the entity's internal controls. It is to understand whether they exist and to what extent they are expected to operate. And the third one, what the auditor should understand in an entity is the control environment. This refers to the context in which the internal controls operate. The effectiveness of the control environment has a significant bearing on audit procedures. And next, what you need to understand is about financial performance. Obtaining an understanding of the entity's performance measures assets they are in considering whether they put pressure on management to act in any way that increase the risk of material misstatement. For example, bonuses based on the increase in profit margin may provide incentive to overstate revenue and understate expenses. Next slide. Now I will explain about the audit timing. The first thing that has to happen, it is a planning visit, or if not a visit, at least a telephone call. And there would certainly be a visit before the first audit of a new client converts. Next slide. So what you need to know about the audit timing? I will make it short. So contact is necessary because at the very least, you have to agree with the client when the audit staff will visit. Also, at this planning stage, inquiries should be made about what changes may have taken place at the client since the previous audit. For example, they may have a new accounting system, or there may be changes in staff, and they might have expanded. So instead of having one shop, they maybe have two, and that will have implications for inventory counts. And the next stage is what's known as the interim audit. The interim audit will typically happen perhaps in July or August of the year to 31st December. The auditor will carry out tests of controls to ensure that the system of internal control, as they understand it as specified by the client, is actually working in practice. And last but not least, there will usually be some audit procedures that have to be carried out at the reporting date. For example, where the value of inventory included in the financial statements will be based on physical quantities, and the auditor will plan to attend the physical count. So, as you can see in the slide, there are a few about that what you should know about audit timing. And what is very important is that you should know that usually after the interim audit, the auditor will send a management letter to the client. So this will report any weaknesses or deficiencies in internal control identified during the audit. So that's marked the end of our discussion of our...
Alif, hold on. So basically you're saying it's like a timeline of your audit lah.
Yes, this is how we like the timeline and the exact date where you should begin to audit, and what date the audit process will be the end. So it's like a timeline of the audit process.
Good explanation, Alif.
So guys,
Guys, that's the end of our discussion.
It was
Alright.
it was
Alright. Thank you
Right,
guys.
I can meet all of you if the university get open one day, okay?
Yes.
Stay safe.
I miss you all of you.
Alright.
Miss y'all like somebody.
Alright, see you. Bye bye.
Bye guys.
Like somebody.
Thank you.
Fuck, cancel. Shine. Fuck.